We're here at the 54th annual meeting of the World Economic Forum in the Swiss Alps, where many prominent business and political leaders have gathered.
Also, a lot of key minds in the land of markets and the economy spoke to Yahoo Finance about their outlook for stocks and the economy. Here's what they told us.
Here at the World Economic Forum in Davos, we've been talking on the sidelines with folks about the upcoming U.S. presidential election and the effect it might have on U.S. markets, on the global economy, certainly the U.S.'s dealings with other countries. One of the folks we want to talk to about that is David Rubenstein, co-founder of the Carlyle Group, which has $382 billion in assets under management. So putting a lot of that money to work in markets around the globe. David, thank you for being here.
My pleasure. Thank you for having me.
And of course, we should mention you're a TV host, fellow TV host as well. We would be remiss if we didn't mention that.
The highest calling of mankind, being a TV host, right?
We think so. So what effect do you think this election is going to have on markets? The last one was hard to predict, but can we predict anything about this one?
Well, tell me who the president's going to be and who the Congress is going to be, and I'll tell you what the impact will be, probably. So look, if the Republicans win the White House and both houses of Congress, clearly there's going to be a more pro-business approach. If the Democrats win both houses and the presidency, probably be not as pro-business, I guess. But you know what the economy statistics show is that the economy actually does the best when you have divided government. Now that wouldn't be logical because the government is fighting with each other. But actually, if you go back over the last 50 years or so, the S&P 500 or the equivalent go up more when you have divided government. And it's not easy to explain why that is, but maybe it's a checks and balance kind of thing. If the president of the United States is Donald Trump, future, obviously a lot of CEOs will be happy. They won't say so publicly, but he will probably reduce taxes, reduce regulation. If Joe Biden is elected president again, I think some business people would say we're going to have more regulation, very difficult to get antitrust approval for things. But in the end, you adapt to things. What business people are good at is adapting. Just tell them what the rules are and they'll try to figure out how to deal with it. So it's often difficult to predict where the markets are going to go, though, because interest rates are going to drive it more than anything else, and that's pretty much apolitical.
Are you surprised that Trump still has this support for another presidency in this country?
I am surprised. The day after he lost the last election, I was on the television show, and that morning I said, I think he might run again, and people laughed at me. But the truth is, he never gave up the idea of running again. He thinks he won the last time. He wants to prove that he deserves to be president again. I'd say the most amazing story in American politics over the last 50 years or so, other than the fact that a black man was elected president once, or twice, Barack Obama, is that Donald Trump came from oblivion in terms of politics, was elected president, and now has a chance to be elected again after being nominated for the third time in a row by the Republican Party. No other Republican ever has been nominated 3 times in a row by its party.
Even though he is a Republican, obviously he's not a very traditional Republican, right? We talked about the effect on the markets, and I think we think equity markets. What about capital markets, particularly globally? I mean, we've been told that European leaders, for example, are quite concerned about a Trump presidency. Is there going to be effect on capital markets as well?
The Europeans never liked Donald Trump. I don't think they're going to like him if he comes back as president again. I think he has a lot of support in other parts of the world. I'm not his advocate, but I would say that some parts of the Middle East he was pretty popular. I think he was reasonably popular in some parts of the Far East, Japan as an example. But I just think markets will adapt. I think the biggest issue we're going to have to deal with if Trump is president again is just living through some of the dysfunction the government has with Congress, Congress's inability to get things done. That's the biggest problem we have. It's not the president so much right now, but the Congress can't seem to pass appropriation bills or keep the government going, and that's a big problem.
Is the business community prepared to work with him? Or will they fear being mentioned on one of his social media accounts and maybe they don't want to get entangled with the administration?
It's too early to say. Obviously, very few business people do not want to help the President of the United States when they're asked to do so. So if he asks them to do so, I suspect if he wins, he'll probably win by a margin sufficient such that people would say, I want to help the President of the United States, I want to help my country. But it's too early to say. And remember, Joe Biden has a reasonably good chance of getting elected too. Incumbents tend to get elected more than they get defeated, and he's got a reasonable chance. So it's too early to say. If you were to predict who the next President of the United States is going to be 10 months in advance, the last 10 presidential elections, you'd be wrong every time. You wouldn't have predicted 10 months in advance Barack Obama, Donald Trump. You just wouldn't have predicted it. Or Joe Biden 10 months in advance. So it's just too early to say. We have to figure out what the health is of these candidates, what other geopolitical events take place that might hurt or help one of the candidates. It's just too early to say.
All right, David, I want to switch gears, and this might be a tricky one. I don't know how much you can say. Are you going to own our Baltimore Orioles? What you can give us any kind of something on that?
Are you from Baltimore?
I'm from Baltimore.
There's some things I can't talk about yet, but I've read about that, but I don't know. We'll see.
You read about that. Okay, fair enough. We will stay tuned and hopefully have you back to talk about that. Something else, again, I don't know how much you can say about this. I know that you didn't go to Harvard, but you're involved with Harvard, particularly the Harvard Corporation, which is the parent.
I was one until July 1 of this year.
Right, exactly. What do you make of what's been going on, not just at Harvard, but in higher education more broadly? As you know, there's a lot of concern over, in particular, anti-Semitism and just sort of DEI initiatives on campuses. What do you think?
Well, what happens on university campuses reflects what goes on in the country generally. So it's not as if certain things happen only on university campuses, they're not happening elsewhere. Currently, I'm the chairman of the board of the University of Chicago, and we have a different policy than many other universities on public policy kind of statements. We don't issue public policy statements on any issues, so we've dodged certain things that maybe other universities weren't able to dodge. But we do have, issues of making certain everybody has the right to speak and try to not have people prohibit other people from saying what they want to say, within reason, obviously. You don't want to have people encouraging violence and things like that. But universities reflect the society that they're in. And so in the late 1960s, for example, we had a lot of protests against the Vietnam War, but that reflected what went on in society. So right now you have a lot of concern about anti-Semitism in the United States, as there should be, and that is reflected sometimes in college campuses too.
Why do you think DEI initiatives have come under so much scrutiny? I think to the average person out there, this seems like good for business and good for the country.
The United States in 1960 was a country that was essentially a white country. 90% of the people that voted in that in 1960 election were white. 8% were black, and the rest were other minorities. The country's different. And people who are white, maybe not educated, or not, they feel globalization has passed them by. There's a lot of resentment towards affirmative action, DEI, things like that. And I think Donald Trump has played to that somewhat. I think that there's a lot of concern about DEI in some circles, and maybe it went too far in certain areas, but I think it's probably going to tilt back. Nothing goes forever without making some changes. So I think DEI is a good thing, but in the end, some people have resented it, and some people feel that what the Supreme Court said about affirmative action in college admissions is probably something that should be reflected in other parts of society as well. In other words, not so much affirmative action. That isn't my view, but that's the view of many other people.
And just quickly to end here, some folks in the financial world have said, I'm not going to hire someone who comes from this university who's said this particular thing. Well, obviously, you have a lot of employees at Carlyle. How do you think about who are coming from elite universities? How do you think about that?
As a general rule of thumb, trying to penalize people for the rest of their life for what they might have said or not said while they were in college is probably not a good thing to do. So what did you do in college that you might not want people to know about? What did you do in college? Okay.
Yeah, exactly.
So everybody probably did something in college they were probably not proud of, and so I think you shouldn't penalize somebody for the rest of their life by something that happened in college that they might have done when they were relatively less mature than they are when they're going to be an employee.
David Rubenstein, thanks so much.
Thank you.
Good to see you. A lot of conversations being had on AI, on sustainability, on lots of topics, but also a lot of sidelines conversations about the global economy. And we want to have a frontline conversation right now on that topic, amongst others. Stephen Schwartzman is joining us, Blackstone co-founder, chairman, and CEO of the firm with about $1 trillion in assets under management. Thank you so much for being here.
Well, thanks for inviting me.
So what are you hearing on the global economy from the folks who are gathered here? And is it changing what kind of your perceptions are of what growth is going to look like this year?
Well, growth is pretty good, surprisingly. Really held up by the consumer. The consumer had lots of extra savings as a result of staying home during COVID and being paid the same, but not having the expenses that they'd have of commuting and buying their lunch out and things of that type, and they've been spending their money. When they started running out, they enjoyed the spending so much they're borrowing money, and then to the extent they have money in the stock market, the last quarter had explosive appreciation, and people tend to spend not a percentage of their income, but they spend a percentage of their wealth. So if you make a killing and you have an extra $10 million that some happens through some circumstance, you always end up spending more money because you feel that you have more. And so we have those three factors that have washed into the economy. Nevertheless, with higher interest rates, we can feel the economy slowing. That doesn't mean it's going down. It means the amount of growth you're having is less every quarter. So we also see that inflation has really been tamed much more than has been reported publicly. So when the Fed starts lowering interest rates, seems to be fascinating to everyone. It's not fascinating to me because all I care is that it's going to happen. And whether it happens in the second half or a little in advance, it doesn't matter. But what matters is that people now expect that to be happening, and they're correct. And that'll create a better market environment and will most probably keep us out of a recession. So when those rates really go down, we hit the 2% inflation, that'll give you a real impetus for another market cycle. So that's the way, we sort of see things.
Cue the sun coming out from behind the clouds, just as you say that.
Is it hard to find great investing opportunities in an environment that has traded up in advance of those rate cuts?
Well, you have to look other places rather than do, just what everybody does. And there's always places like that. Energy transition, these are all pretty much new builds of some type or modification. So, that's not buying a stock market influence type of thing. We have data centers which are exploding with growth. They're all being constructed. So in effect, that's at book value, but worth much more after you buy them. European real estate, surprisingly, of the right type, is very exciting for technical reasons. The real estate's fine, but the people who own it are under a lot of pressure. And they're under pressure because in Europe, hard for Americans to understand, that they had negative interest rates. So if you were borrowing money, it really didn't cost you very much. Now it costs you 500 basis points more. So if you have a lot of borrowings and the cost goes up, not every owner of real estate, but many of them are under real financial pressure. And the way you get out of that jam is by selling assets. So what we're seeing is people approaching us with pools of their assets, enough to pay down enough debt so that the banks won't worry them. On the other hand, we don't like all the things they offer us. So what we typically do is say, hey, unlike Europeans who are a little scared of buying real estate, we have lots of money, we're eager to buy, but we only want to buy data centers or student housing or other of the few asset classes. Go back and look for them, and we'll take everything you have.
So you're being more selective in this market.
Absolutely.
We don't have an enormous amount of time, and I do want to get some other topics. I want to ask you a bit about the election, and I know you've talked about this a bit already and said you're not ready to support a particular candidate, whether it be former President Trump or someone else at this point. What do you want to see before you are ready to make that kind of decision?
Well, as far as I know, there's only been one vote that's held.
It's true.
Unless you know something different. And, I'd like to see, what the public has to say, with a number of shots on goal.
Do you want to see what the courts have to say as well? Is that going to be important?
I think that's a separate issue. And that won't be knowable for a very long time. as I understand it, based on what I read. So there are always uncertainties in all U.S. elections. This one may have more than others.
Some of the policies put in place by the current administration, has that helped your businesses at all?
I'm struggling on this one.
Nothing in the IRA that would be helpful for
there's a little in the IRA.
Construction, for example?
There's a little in the IRA, but the regulatory environment it has so changed in a negative way that one tends to look at these things as an integrated whole, not picking apart pieces of it. And this is a very accelerated regulatory environment that makes conducting business more complex than it ever was.
Lastly, I want to ask you about something that is not as much on the agenda here at WEF. Somewhat it is. We heard from the Israeli president. We heard from some of the families whose loved ones are still being held hostage by Hamas. And I'm just wondering how if you think that there has been enough global discussion of anti-Semitism and about the war in Israel here and globally.
Well, I think discrimination against any group of people is un-American. We don't believe that. We believe, certainly at Blackstone, that everyone's equal, and that, it doesn't matter, what ethnic group they're in. It doesn't matter what religion they believe in. It doesn't matter to us what gender they have or what their sexual preferences are. So when you see something, like anti-Semitism, it violates not only our core beliefs, but based on those congressional hearings, it violated the core beliefs of almost everybody. Up on the hearing benches, and in the country at large. So I think that it's very troubling, and it would be if it was against any group. There's a whole issue on Islamophobia, and that's not fair. That's not the way things should be. So those of us who have what I used to think were American values really are troubled and want the society to address this type of problem.
Well, back when I was in New York, I was talking all last week about the approval of spot Bitcoin ETFs. And guess what? I'm in Davos, Switzerland, and I'm still talking about the approval of spot Bitcoin ETFs. There's definitely a crypto presence here. But is this the tipping point that a lot of the industry has been looking for? Michael Sonnenschein is with us, CEO of Grayscale. We talked to you down at the New York Stock Exchange. Now we're talking to you here. Yeah. I want to ask you about a study that you guys commissioned from Harris Poll, because one of the numbers stood out to me. 46% of voters are waiting for additional policies before investing in crypto. So we talk about the ETF as like this big catalyst.
Yes.
But a lot of people are waiting for additional policy. Like, what does that mean? What does that mean to you?
They are. And, I think it's not just about waiting for additional policies. They're actually waiting for, it's regulation itself, to just put a finer point on it. The survey that we did with Harris Poll is really looking at voter attitudes going into this U.S. presidential election, looking at whether or not they're concerned that the candidates they may be voting for are fully informed on these issues. What are the issues that voters have on their minds when they do go to the polls? And when it comes to new technologies like crypto, like Bitcoin, they believe that crypto is the future of finance. Like 50% of survey results prove that. And about 4 in 5 people actually said that they would like to see more regulation. And I do think that on the heels of the spot Bitcoin ETF approval, we will see further engagement from our congressional leaders around legislation to really see that move forward.
Michael, we just talked to Blackstone co-founder Steve Schwarzman, and he said regulations have accelerated under the current administration. This has become tougher to do business. Why does your industry want more regulation? Does that add more red tape, more cost, and maybe you can't innovate as fast?
Well, I can't speak for the entire industry. I can speak for Grayscale. As an asset manager that has always asked for permission, not for forgiveness, we have to remember, we're not a crypto company. We're an asset manager. We're a highly regulated business. And so we've always felt that as the asset class is going to mature, as investors are going to want to wade deeper into it, we need to ensure that the appropriate investor protections are there, not just from investment products like Grayscale offers, but really industry-wide.
You know, you've been coming now to Davos for several years, right? How have the conversations around crypto changed? It does feel like there's not like the hype cycle around crypto. Now it's shifted to AI.
No glow sticks on the promenade.
Yeah. You know, so, but how's that playing out in conversations you're having?
Well, I would certainly say having the spot Bitcoin ETF approval last week, GBTC uplisting to New York Stock Exchange, then being able to come to Davos this week and really elevate the conversation with world leaders and politicians and regulators has been a really humbling experience, to say the least, because, to your point, AI has been such a big focus at this year's Davos, at this annual meeting, as well as the theme of rebuilding trust. The conversations have actually been mostly focused on, for us, about the intersection of AI and crypto. Very interesting, right? And so for a lot of folks, they're excited about AI, they're excited about the use cases, but they also see some of the byproducts of AI, things like bias and deep fakes, et cetera, and are beginning to look at that intersection with crypto and how the underlying blockchain technology can actually help to alleviate some of the challenges that AI is also creating. So we actually see that we're at this crossroads where these two technologies may actually symbiotically grow together and accelerate together.
Can you give us a timeline to the extent you could? So right now, first quarter, we got the spot Bitcoin ETF approvals. Second quarter, third quarter, fourth quarter. What should investors expect?
It's going to be a busy year for crypto, to say the least. So you've certainly already seen some filings, not only from Grayscale, but other issuers looking to bring spot Ethereum ETFs to the market. I think it's only natural for investors to want to diversify their crypto holdings. Ethereum, second largest, crypto asset by market cap. We're a couple months away from the Bitcoin halving. I'd love to come back and talk to you about that as that comes closer. That's always historically been a big catalyst for crypto prices. And then certainly, the U.S. presidential election. I think depending on where the election falls out, we may see, some further advancements on the regulatory front, or perhaps a little bit more of the same, where we're kind of pounding the pavement looking for more and just having to be patient until we get there.
Among the many big, weighty issues, of course, that are being discussed at Davos, besides AI, are climate change and the fight to slow climate change. Of course, pivotal in that fight is Special Climate Envoy for the U.S., John Kerry, and he is joining us now. Of course, Secretary Kerry, first of all, thank you so much for being here. Really appreciate it.
Thank you very much.
We have just gotten the news, of course, in the last couple of days that you're going to be stepping down from this particular role sometime in the spring. So in your remaining few months, what's on the agenda? What do you really want to get accomplished, considering the clock is ticking on climate change?
Well, the same thing is on the agenda that's been on the agenda from the beginning when President Biden created this role, and that is that the world is behind in this effort to deal with the climate crisis. And we're seeing the incredible costs to communities all around the world. And people are dying. 7 million people a year die just from the bad air quality that comes from greenhouse gases that are put up in the atmosphere. So in Dubai, just a few weeks ago, 195 nations agreed that we must transition away from fossil fuels, and that we need to do so in accordance with the science, which means trying to keep 1.5 degree limit on warming and reaching net zero emissions by 2050 and accelerating right now. So my job in these next weeks is to help in the transition, but to make certain that we are moving full speed and doing as much as we can to excite the business community to step up and help be leading this transition. We can't do this without major corporations around the world stepping up. And I'm glad to say that here in Davos, but previously in Dubai, we had about 100 of the top corporations of the world, biggest companies in the world, step up and agree to help lead in this effort to transition. So we have a lot of work to do. It's exciting work. It's actually the biggest economic opportunity the world has known since the Industrial Revolution. Massive transformation of how we heat our homes, how we drive vehicles, or what kind of vehicles we drive. What fuels we use, how we're going to have efficiencies built into our buildings and our homes, where we save money, and you actually have cheaper electricity. So there's really a plus side on the other side of this journey, and that's what we want people to understand.
Yeah, with the CEOs, Julie and I have been able to talk with, Mr. Secretary. They're focused on AI. They're focused on the outcome, whatever it might be, with the election. When you talk to these CEOs, where does climate fall on that priority list?
As a very high priority, but not necessarily the number one or two in many of their cases. I mean, a lot of these guys are fighting for market share. They're in steep competition with other countries. They're concerned about cost of capital, about inflation, about all those kinds of things, obviously. But they're also parents or grandparents, and they are deeply concerned about the future of this planet. And they know, because they've joined up with our efforts, that we need to reduce these emissions. There's only one cause of this climate crisis. It is the unmitigated, the burning of fossil fuel that does not capture the emissions. And so we have major initiatives now that people are engaging in to try to build out the technology to be able to capture, maybe do something with CO2, carbon dioxide. But we also have methane, which is being released from the earth by the permafrost thawing, which is happening because of the warming of the planet. And that methane is 80 to 100 times more destructive than CO2, and it's 20 times more destructive in the longer term. So look, if you can't, if you're not ready to acknowledge science and to recognize the reality of what is happening around the planet with greater intensity to storms, many more floods, torrential rainfall, greater intensity to tornadoes and winds with greater frequency. The damage that is being done by the climate crisis is now costing us already in the billions, and it's going to cost much more if we don't move now. So I think these CEOs understand that. I mean, we have Apple and Microsoft and Google, Salesforce, FedEx, Boeing, Ford Motor Company, General Motors, all these kinds of companies, CEOs, have made the decision that they're going to move into this low carbon, no carbon, clean economy. And that's the only way we avoid the worst consequences of the crisis.
Secretary Kerry, all of these companies have made these pledges. What about the other largest polluter in the world? Of course, China, your counterpart there, is also stepping down. What's your level of confidence that momentum will continue with China and in cooperation with China on this issue?
Well, I can't express that in terms of my confidence or lack of confidence. You know, we have to do all the things we promised to do, all of us, and we now have greater transparency and accountability in the system to know whether people are keeping their promises or not. We have satellite technology that now has the ability to track methane, track CO2, determine the footprint of any big corporation in the world. So people are not going to be able to hide inaction or not enough action. We will have accountability. Now, China has brought a massive amount of coal plants online. And frankly, it's been one of the areas of discussion between us. But China is also manufacturing and deploying more renewables than all the rest of the world put together. So we have to see how this unfolds. We agreed to work with China in a transparent, constructive way, accountable. We're not giving up anything in doing that. But it's a way for us to make certain that we are all in this together, because no one country can solve this problem alone. We have to all be at the table and doing it. And that includes China, which is the largest emitter in the world. We're the second largest emitter. We're the largest economy. They're the second largest economy. So that's why China and the United States have been sitting down to try to figure out where are the areas we may be able to cooperate together in the interests of the whole planet and of citizens everywhere.
4 years into the presidency of Joe Biden, what is the state of our relationship with China?
Obviously, there are very real issues between us, which we have fundamental differences on. Excuse me. And President Biden and President Xi sat down recently in meetings in California and San Francisco. I was privileged to be part of the large discussion that we had. And both leaders were very clear about the interests that they are duty-bound to protect. And we needed to understand from President Xi, and they needed to understand from President Biden. I think President Biden made it crystal clear where the differences are that we need to work on. And there are big issues: access to the marketplace, theft of intellectual property, the questions of what's going to happen to nuclear weapons, both with China as well as with Kim Jong-un in North Korea, Hong Kong, Taiwan. I mean, there are a lot of these issues. But President Biden and President Xi decided early on in President Biden's administration that we were going to work to try to keep the climate issue separate, because it's not a bilateral issue. It's a multilateral, global issue where all of us are involved, and every one of us needs the rest of the big polluters, big emitters in the world to come to the table and be part of the solution. President Biden has been leading in that effort, holding a summit, three virtual summits now in the last 3 years, in which he has brought the largest emitters in the world to the table and raised the ambition of each and every one of those countries to be able to address this issue faster. So I think his leadership has been critical. The passage of the IRA in the United States is creating an amazing amount of jobs at home. It's the strongest environmental legislation in the world. There are other countries that wish they had it. And the result of it is that we're creating jobs on new technologies, which is going to lower the cost of energy for Americans. Example, solar has come down 83% in price, distinctly cheaper than fossil fuel energy. And in fact, last year, solar alone had a greater amount of investment than fossil fuels did. So we're seeing the transformation really beginning to take hold now. And my sense is that China and the United States need to work together in order to make sure we meet our goals.
Mr. Secretary, one of the reasons you're reportedly stepping down is so that you can help campaign to re-elect Joe Biden as president. What do you see as your role? What specifically will you be doing for him?
Well, as a federal employee, I live under something called the Hatch Act, where you're not supposed to engage in politics, in elected politics, partisan politics. And so what I will really do is regain my own voice by not being a federal employee. And I will campaign for President Biden because I think the stakes are so high, not just in our country and for our country, but for the world. And I'm not going to go into the why of that and describe it now while I'm in my transition, but at some point I'll make very clear what I think is at stake in the race and why I want to be engaged in that discussion.
More than half of chief economists surveyed by the World Economic Forum say the global economy will slow this year. Of course, last year at this time here in Davos, the talk was much the same, and that recession, at least in the U.S., did not materialize. We were hearing a lot of optimism, meantime, from CEOs. So let's talk about the risks to the global economy, whether in fact a recession is coming. Kenneth Rogoff, professor of economics and Boas chair of international economics at Harvard University. Ken, thank you so much for being here.
Thank you for having me.
So a lot of risks still out there. Recession coming or not coming?
Well, I mean, I think, very uncertain, but I'd say 25% chance. I think in a normal year, 15%, and this year it's got to be higher than that, just given that a few years had passed, given how strong the growth was, how high interest rates are. And I think it's worth bearing in mind, the U.S. has been a little bit of an island here. Europe had a good year because it only had a bad year and not a deep recession. China has been growing very slowly. So it's not that global growth is so great, it's that the U.S. did better than expected. But chances are we're growing above trend, so chances are it's going to slow down. But I don't think I was in the camp when I spoke to you last of saying, oh, there's definitely going to be a recession. But I would have thought the odds at the beginning of last year were 50-50 that we would have had a recession.
Do you think this is going to be a U.S. economy that needs 4 to 6 interest rate cuts? That's what the market is pricing in now, and I think it's shocking. It's surprising to see investors expect that rate of cuts.
Well, it sort of depends if you think we're going to have a recession or not. If you think we're going to have a recession, yes. But if we're just having a soft landing, absolutely not. I think, in fact, I've been saying this to you for a while, the super low interest rates we saw, particularly from 2012 through 2021, the real 10-year interest rate average 0, the inflation index bond. Forget it. I mean, that's not coming back for a long time. I don't know, ever, but not for a long time. If you look at a long history of interest rates, they have lots of these periods where they're high, they're low, and there's reversion to mean. It can take a while. And I think, by and large, that's what's happening. Maybe the trend's slightly downward, but nothing like if you drew the last 40 years, it goes like that. And anyone who was extrapolating that just had it wrong. So the inflation will come down, but interest rates aren't going to come down proportionately. Now, that's just looking at time series statistic. It's sort of the structure. I hesitate to say exactly what it is because I've been critical of people who've been trying to explain why they're so low, the secular stagnation, never productivity, demographics. But I do think I can point to some things. I mean, one thing is global debt is really high, and the interest rate doesn't respond hugely to it, but it's grown a lot. Second, I can't imagine if we're looking at a long horizon, defense expenditures aren't going to go up worldwide a lot. I want to say in the United States, if they just went up 1%, that's less than I think they're going to end up going up, and that's partly because how much they're going up in other countries. Green transition, which maybe nobody outside Davos thinks is happening, but probably will, and that's going to be really expensive. Whoever wins in the U.S. election or any of these many elections is probably going to be a populist, with the only question if they're a right-wing or a left-wing populist, more redistribution, budget deficits. So I think there are a lot of forces suggesting interest rates aren't going to come down as much. Mm-hmm. And again, if you look at the forecasts, probably a recession's more likely than a boom. So maybe that's partly built into what those predictions are. But I think if we have a soft landing, maybe we'll get 3 cuts, something like that. I think the Fed just doesn't know what it's looking for. It wants to find a path of interest rates so that inflation's stable. They don't know what it is, and they're going to feel it out.
$34 trillion in total government debt. How concerned are you about that?
Well, I think everybody who works on it thinks that it's on an unsustainable trajectory. And this interest rate issue is a big part of the equation. If you believe, and there are many academics I respect who do, that interest rates are going to go back to what they were in the decade running through the pandemic, or even lower, well, it's a free lunch. Modern monetary theory works. You can just do whatever you want. On the other hand, if real interest rates are going to be more like 1.5% that we're paying on debt, and if growth isn't wildly higher because of AI or something, it's not sustainable. And I don't think the politicians in Washington are remotely ready to confront this issue. Not just in Washington, really in a lot of the world.
They're happy to talk about it, but doing something about it is very different.
That's well part of it. I mean, I hear some of them in the Republican debates talk about it, but it's not clear what they say they're going to do about it.
If we are looking at a world of higher interest rates than we had become used to for quite some time, does that mean we are looking at a world, if not a recession, but sort of permanently lower growth, or at least for the foreseeable future, that we're just not going to be seeing the rates that we saw in the past?
Well, no, I mean, not necessarily. We've had great growth with much higher interest rates over a long period, and many countries have. There are many things that feed into that. I do think it makes the Fed's job harder. There are pressures over the next decade that are very different than we had during the globalization era. So deglobalization, who knows, but probably. Geopolitical risks, probably some of these things I mentioned, like defense spending and such, putting pressures on the Fed. And I should say other things like maybe rising unionization, monopoly power. These may be perfectly good things, but they create more pressures on inflation. I have a couple very bright young co-authors. I've done some papers on this, and our thesis is that over the next decade, you're going to see more oops, inflation was high than disinflation. We can't control it.
Well, that's not good news.
Well, lastly, before we let you go, you mentioned AI. We just talked to Bill Gates, and he said AI may be a productivity driver for white-collar workers. He also mentioned coders. I had a conversation with the managing director of the IMF, said AI might cause the need for more social safety nets to support displaced older workers. Where do you fall in this debate?
Well, the thing is, everything's true, and the question is the pace at which it plays out. I've been an optimist about AI forever, in the sense that I thought it was coming from my days as a chess player and watching it. But what I would always say at the same time is I don't know if our society's ready for it. And there's so many different ways. One is probably lots of jobs are going to be lost at a very fast pace. There are questions like, how it affects warfare, how it affects cyber warfare, how it affects, things like social media and what we see in the elections. So it's a wild card in a lot of things. Personally, I think we really screwed up on social media by not regulating it early and letting it take time to play out. I don't see what harm there would have been if it took another 5 or 10 years to get to some place, even like where we are now. I think it's been phenomenal. I understand all the benefits, but on net, I think if you look at everything from our political dysfunction to mental health, it's been a negative. And AI is 10x, 100x. So although I certainly don't consider myself, ultra left wing, I kind of agree with progressives like my neighbor in Cambridge, Elizabeth Warren, on this, that what's the harm in, having more regulation and slowing it down? Not a popular opinion here, but that's the way I see it.
It's not from the folks we've talked to, but it is an interesting one. Ken Rogoff, thank you so much for spending some time with us. Thank you. I want to point to something you wrote about in your Gates notes looking ahead to 2024 when you said this election will be pivotal for the presidential election in the U.S., that is, will be pivotal for climate and health. Can you dig into that a little bit for us?
Well, I'm a huge believer in more generosity to poor countries to help them with their climate challenges, so-called climate adaptation, and to drive health. Our biggest R&D budget for health in the world is the U.S. government R&D budget. The U.S. government in HIV, under President Bush, created an HIV program called PEPFAR that saved tens of millions of lives. And so the U.S. government is the biggest player, and getting a group in that maintains generosity, spends that money well for health challenges and climate challenges, I hope we achieve that.
Do you want to put a fine point on it and tell us which one you think is going to do that?
Well, we'll have administrations that are more or less engaged in those issues.
Do you think the current administration is engaged in those issues?
Yes. I mean, in both health and climate, they've been very engaged. I'm one voter. You might guess how I'm going to vote, but we've been able to work with every administration and try to get it's human charity. It's creating a stable world. So hopefully we can make the case no matter who's elected.
Yeah, how impactful has the Inflation Reduction Act been to the green movement and the work you do with the foundation?
The IRA has helped these early stage companies that my group called Breakthrough Energy is funded over 100 of those companies. And I'd say about 30 of them are able to go build pilot plants aggressively because with the tax credit, they get bootstrapped So even though at first their technology is expensive, every one of these companies, we only put money in is if we know it can get so that the price eventually is the same as the current way of, say, making steel or cement or providing transportation.
And one last question, because I know you have to run. Since you talked about breakthrough, I was struck in reading your different recent commentary how optimistic you are. And particularly on climate and energy, it can feel daunting. So where does that optimism come from? Because it feels like there's not a lot of urgency necessarily around these issues.
Well, I do worry that things like global health are not as much on the agenda as they should be. You know, everything that's bad, eventually you measure through human health. You know, climate is bad if you have more malaria or more malnutrition. And so just saying, okay, what are the breakthroughs, whether it's labeled climate or not, to improve the human condition, we should continue to do those. Because of human innovation, we've come a long ways, even since the year 2000. And it's not that visible to people. And yet, you know, emissions per person have gone down. Total emissions are about to peak. Will we hit the deadlines? That's what's at risk. Because of innovation, we'll eventually get emissions down. But, you know, I do worry that we're going to miss a lot of the milestones that we've set for ourselves.